Welcome to the Deep Dive from Talk Tickers. We break down earnings calls so you get the crucial insights. Today, we're digging into Intuitive Surgical's Q2 2025 call. We've gone through it all to pull out what really matters for you. Our goal here is simple: give you a clear picture of what was, frankly, a very strong quarter for them, but also touch on, the bigger market picture. So let's get straight into the key numbers for Q2. Intuitive really did put up some robust results, showing continued momentum. Revenue climbed a solid 21% compared to last year, hitting $2.44 billion. Pretty impressive. Their main workhorse, the rigid procedure, saw really healthy growth, up 17% globally, and system placements kept pace to up a significant 16%. This all flowed down to the bottom line. Their proforma earnings per share jumped 23% to $2.19. And it's a big deal. This quarter, there was a major leadership change. Dave Rosa stepped in as CEO. He's been with Intuitive for nearly 30 years, taking over from Gary Goodard, who left quite a legacy.
Yeah, and what's really key here is that these headline numbers, they aren't just numbers on a page. They really reflect solid underlying performance and procedures and capital placements, too. And they manage this even with some ongoing macroeconomic headwinds, especially in some international markets. When you zoom out, it really highlights the resilience of Intuitive's core business. Strength of the platform they've built. And the core metrics back this up. Their installed base of DaVinci systems grew 14%. That's nearly 10,500 systems out there globally now. It's a huge footprint.
Okay, so those are strong headlines. Let's maybe unpack the drivers a bit, starting with those DaVinci procedures. That 17% overall growth is definitely eye-catching. In the U.S., growth was 14%. Seems like that was mainly driven by benign general surgery cases. Things like cholecystectomy, that's gallbladder removals, and appendectomies were big contributors. Apparently, part of that is Intuitive helping hospitals do more procedures after hours.
Right, expanding program capacity.
Exactly. But internationally, the growth was even stronger, right? Up 23%.
Yeah, 23%. Led mostly by procedures outside of urology and really strong showings in places like India, Korea, and their distributor markets. Although it's worth mentioning China, procedure growth there was actually a bit above the global average, but they still describe the capital environment buying new systems as constrained and competitive. Okay,
so there are definitely nuances internationally.
For sure. Like in Korea, part of that strong growth number is because the comparison period last year was weak, due to physician strikes they had. But looking broader, the wide range of procedures growing outside the U.S., the OUS growth, really shows their strategy working. They're pushing beyond urology, which was their traditional strength. And that's a massive ongoing opportunity for them, just reaching more patients across different types of surgery. It's key to their whole story.
Makes sense. So procedures are strong, especially OUS. But how are they actually getting the machines, the systems, into hospitals? Let's switch gears to capital placements. They placed 395 DaVinci systems in Q2. That's quite a few. Yeah. And a big piece of that 180 systems were the new DaVinci 5. So the installed base for that new platform is already up to 689. That's fast.
Pretty fast rollout.
Yeah. And we also saw a huge jump in trade-ins. 83 systems traded in compared to just 21 a year ago. Mostly U.S. customers upgrading to the DaVinci 5, it seems. Oh, and they also placed 54 Ion systems. That's their lung biopsy platform.
Right. And if you connect that capital performance to the wider market, U.S. placements absolutely surged, up 45%. They placed 216 systems versus 149 last year. That's clearly the DaVinci 5 broad launch effect in the U.S.
Right.
But internationally, placements actually dipped slightly, 179 this quarter versus 192 last year. And that seems to be hit by, government budget issues and some trade uncertainties. I think Japan, China, Europe.
So a bit of a mixed picture geographically on placements.
Exactly. But what's interesting strategically is that these U.S. trade-ins, the older X and G systems, they can now offer those to more cost-sensitive international customers. It's kind of a smart way to cascade the technology and make it more accessible globally.
Right. Keeps the ecosystem growing. Okay, so systems are moving, procedures are up. Let's talk money, the financial engine, revenue mix, margins, expenses. How does it all stack up? Systems revenue itself was up 28%. They said that benefited from lower lease rates, more placements overall, and obviously that higher mix of the new DaVinci 5 systems, which, by the way, pushed their average selling price up to around $1.5 million per system.
Yeah, the premium platform effect.
Right. And crucially for the long-term view, recurring revenue that's instruments, accessories, service contracts that also grew a healthy 21%. And it makes up, 85% of their total revenue now?
85%. That's the really sticky part of the business model. Very predictable.
Definitely. And the revenue per procedure from instruments and accessories seems like it held pretty steady, around $1,800. Some minor puts and takes from procedure mix and the new DV5 stuff, but basically consistent.
Okay, so let's look at profitability, the proforma gross margin. And just quickly, proforma means adjusted, sort of stripping out some one-off things to see the core business performance. That margin dipped a bit, down to 67.9% from 70% last year.
Why the dip?
Well, a few things they pointed to. Higher facilities costs. They've been building out new manufacturing capacity, so more depreciation there. Also, a bigger slice of the revenue came from the Ion and the new DaVinci 5 systems, which apparently have lower margins, at least initially. That's pretty typical for new tech. And higher service costs for the DaVinci 5 as it ramps up. More support needed. Oh, and tariffs. They had about a 60 basis point impact from tariffs in Q2. That's 0.6%.
Okay.
But they did adjust their full year tariff estimate down a bit, now expecting around 1% of revenue impact, give or take 20 basis points. Seems like U.S.-China rates came down slightly.
Good news there, relatively speaking. What about operating expenses?
OpEx was up 9%. Mainly driven by hiring, they added about 300 people, half in manufacturing, and those higher facility costs again, partially offset by lower legal expenses, though. And the bottom line on the balance sheet, very healthy. Cash and investments grew to $9.5 billion, mainly thanks to strong cash flow from operations.
$9.5 billion in cash. It's a nice cushion. Okay, strong financials, healthy cash. Let's pivot to maybe the most exciting part, innovation. What's new? Well, DaVinci 5 is obviously the big story, broad launch in the US now. And it got clearances in Europe and Japan for what they call measured launches. And get this, over 100,000 procedures already done with DaVinci 5. That's an incredibly fast adoption rate.
It really is, shows the demand.
Yeah. They also got FDA clearance 510K for a new tool, the vessel sealer curved. Sounds like it's slimmer, more precise for tight spaces. Think thoracic, colorectal, hiatal hernia surgeries. And there are other platforms. SP, the single port system, saw procedure growth of 88% year over year, still rolling out its stapler function carefully. And Ion, the lung biopsy platform, procedures grew 52% to about 35,000 in the quarter. And looking way out, they even demoed telesurgery with the DaVinci 5, including force feedback. Feels like the future, right?
Absolutely. It's got huge long-term potential, though obviously needs serious infrastructure, network reliability and all that.
For sure.
But what's really interesting now is the clinical evidence starting to come out for these new DV5 features. Things like the force feedback, letting surgeons actually feel the tissue remotely. And Case Insights, this AI tool that analyzes video and system data. Early signs suggest these could really help predict complications, refine techniques, basically make surgery safer and more precise.
That's the promise, isn't it?
Exactly. And speaking of evidence, there was the REAL study published in JAMA. It showed a 55% lower risk of local cancer recurrence at 3 years for robotic surgery versus laparoscopy in certain rectal cancers. That's a potentially huge deal for long-term patient outcomes.
Wow, okay.
And this kind of ties into the ongoing discussion about third-party companies remanufacturing Intuitive's instruments. Intuitive's stance is pretty firm. They believe their own instruments, with their quality control, support, and supply chain, offer better overall value and safety compared to potentially cheaper third-party options. It's that quality versus cost debate.
Right. Reliability and safety are paramount in surgery. Okay, so lots of momentum, exciting tech. How does this translate into their outlook? What's the guidance? They updated their 2025 forecast. For DaVinci procedures, they're now guiding to 15.5% to 17% growth. So narrowing the range a bit, slightly nudging the bottom end up. Shows confidence. Pro forma gross profit margin expected between 66% and 67%, and capital spending, mostly on building facilities, projected between $650 million and $725 million.
And connecting that guidance back to the bigger picture, there are a few macro things to watch. In the U.S., there's some uncertainty about fiscal policy and how it might affect Medicaid recipients, which could pressure hospitals. Though Intuitive noted their penetration in the Medicaid population is currently lower, so maybe less direct impact for them specifically.
Okay.
Internationally, those government budget challenges and trade issues we mentioned are still a factor. And while NHS England has this 10-year plan to boost robotic surgery, Intuitive basically said, don't expect any major uplift from that this year. That's more of a longer-term thing.
Got it. So summing up Q2 for Intuitive, it really feels like a story of strong, consistent execution. The DaVinci 5 launch seems to be going very well, fueling growth, and they're navigating this, complex global healthcare environment pretty effectively. They're clearly pushing forward.
Absolutely. And I think what's fundamental is how they keep investing across the board, R&D, training, support, all aimed at what they call the quintuple aim. Better patient outcomes, better experiences for patients and the surgical teams, lowering the total cost of care and increasing access. It's not just marketing speak for them. It seems embedded in how they innovate. They're selling better surgery, better hospital efficiency, better outcomes. That holistic approach is, frankly, really hard for competitors to match. It's their long-term value driver.
Okay, now for our regular segment. This is not financial advice. Just a bit of fun exploring a hypothetical, maybe slightly outrageous trade idea like a hedge fund might consider. Remember, purely for discussion.
All right, so if you were looking at Intuitive's quarter, you see the strong U.S. execution, right? DaVinci 5 driving trade-ins, higher selling prices, strong procedure growth. Plus, they were buying back their own stock opportunistically around $518 a share, shows internal confidence. So a bold, maybe aggressive, long-term bullish idea could be establishing a long position, betting the stock goes up. Perhaps using long-dated call options, say expiring early 2027. The bet would be that their innovation pipeline, especially getting DaVinci 5 fully cleared and ramped up globally with features like force feedback, plus their efforts to drive system use and enter new markets, that all this will accelerate faster than maybe the market expects. Basically, betting they overcome those international budget pressures quicker than anticipated. It's a play on the compounding effect. More systems, used more often with better tech. Again, purely hypothetical.
Interesting thought experiment. So wrapping up, what's the big takeaway here for the future of surgery? Intuitive's focus on that quintuple aim. It's not just talk. You see it in the DaVinci 5 rollout, the focus on evidence, even the tele-surgery demos. As you watch them refine these platforms and push into new areas, maybe ponder how these advancements could really change healthcare delivery, making surgery less invasive, maybe more accessible, and hopefully just profoundly better for potentially millions more people around the world in the years ahead.